Property investment. What is an investment? Why people invest and what they want from their investment. Okay, they invest to earn a return from saving. Okay, they want a rate of return that compensate them from the time, the expected rate of inflations, and the uncertainty of the return. Investment decision is a choice between consumption in the present or at the future time. Present sacrifice, outflow of capital is known but future benefit is uncertain. Investment decision represents certain sacrifice for uncertain benefits. The objective of investor is to minimize the risk involved in investment and maximize the return from investment. Okay, now we look at the definitions of the investment. Okay, investment defined as a current commitment of dollar for a period of time in order to derive future payment that will compensate the investor for the time the fund are committed. The second, the expected rate of utilizations, and the third one is the uncertainty of the future payment. Investment may be defined as a commitment of fund made in the expectations of some positive rate of a return with aim of achieving additional income or growth in values or a sacrifice of current money or other resource for future benefits. Expectation of return is very important element of a investment. Okay, since the return is expected to be realized in future, there is a possibility that the return actual realized is lower than the return expected to be realized. Its possibility of variation in the actual return is known as an investment risk. Therefore, every investment involves return and risk. Perception of the investment. Investment has got three perceptions. Okay, in terms of financial perceptions, investment is the allocation of the monetary resources to asset that expected to yield some gain or positive return over a given period of time. These assets range from safe investment to risky investment. Investment in this form are called as a financial investment. Investment means buying of a asset. For example, you buy the stock or bond or investing in real asset. This investment may then provide a future income and increase in the value. Future income may be interest, dividends, or pension benefit. Increase in value means benefit from the real growth in rent or capital value. Normally, you are invest in the real estate, you will get increase in the value. Okay, benefit from the real growth in the rental or capital value. The second one is economy perceptions. To the economy, investment means that net addition to the economy capital stock, which consists of the goods and services that used in the production of the other goods and services. In this context, the terms investment, therefore, the formation of the new and productive capital in the form of a new construction, new producer, durable equipment such as a plant and a equipment. Okay, investment means the production of the capital good which are not consumed but instead used in the future production. For example, plant and machinery or building. A business may put fund into new equipment or into building or new factory. Either way, it's making an investment to increase the capital in the future. The third one is from an individual point of view. Investment defined as a money commitment of some sort. For example, a commitment of money to buy new car is certainly an investment. Now we look at the characteristic of the investment. Major investment features such as risk, return, safety, liquidity, marketability. All investments are characterized by the expectations of the return. In fact, investments are made within the primary objective of deriving a return. The return received in the form of yield plus capital appreciations. The dividend or interest received from the investment we call as a yield. Different type of investment have a different rates of a return. Return is a major factor which influence the pattern of investment that is made by the investor. Investor always prefer a high rate of return from his investment. Okay, for example, investor as invest his capital at the 200k and the expected return will receive from investment is 12,000. The rate of return of the investment as follow. Okay, to calculate the rate of return, first you need to get the income, divide with the capital times with 100. So the rate of return of the this investment is 6%. Okay, what is the risk? The risk may related to the loss of capital, delay in the repayment of the capital, or non-payment of the interest or variability of the return. Okay, this is one of the major characteristic of the investment. The risk depend on the following factors. Okay, such as a maturity period. The longer the maturity period, the larger is the risk. Okay, normally government and semi-government bodies issue security which have a less risk compared to the other security or other bond. In the case of debt or fixed deposit, the risk of above investment is less due to their secured and fixed interest payable on them. Risk and return of the investment are related. The higher the risk, the higher is the return. Okay, this is a relationship between return and risk. Higher the risk, the higher the possible return. Lower the risk, the lower the possible return. Okay, the third characteristic is safety. Safety refer to the protection of the investor principal amount and the expected rate of a return, the amount you invest. Every investor expected to get back his capital on maturity without loss or without delay. So that you need to carefully review of the economy and industry trend before deciding type and timing of the investment. Okay, the last one is liquidity. Okay, liquidity refer to the investment ready to convert into the cash positions. Okay, for example, fixed deposit, bond or share are more liquid compared to the property. When you want to sell your property, it will take several months due to take several procedure and law. For example, you need to do the sales and purchase agreement, pay the stamp duty, and also the valuation report. Long procedures.